Now, let's move on to the next session on the theme of Rethinking Japan's Startup Ecosystem, Priorities for the Next Decade. This session is powered by IVS. Let me call out the speakers. Mr. Shinichi Takamiya, Managing Partner from Globus Capital Partners. Mr. Kenichiro Hara, Co-founder and General Partner of Coreline Ventures. Ms. Yuka Hata, Senior Managing Director and Head of Fund Investments of Japan Investment Corporation. The session is moderated by Mr. Akio Tanaka, Founding Partner of Headline Asia.
Hi everyone, welcome to our session. We are going to actually talk about the big, I think, opportunities and challenges that's facing our Japanese startup ecosystem here today. And before we start, actually, let me do a quick introduction, but before that, I'd like to just check up on the audience here. Who is actually from Japan here? If you're from Japan, please raise your hand. And so about half of them. Who's not from Japan? Okay. Great. And also, quick check, if you're an investor or something close to the investor side, please raise your hand. Okay. And are you on the startup side? If you're on the startup side, please raise your hand. Not many startups and some investors. So the rest of the people, I don't know what you do, but welcome to our session. Now with that, I'd like to actually introduce you to our panelists. Maybe I'll go closest to me. Takamiya-san, perhaps quick intro of who you are.
Hi, my name is Shin Takamiya from Globus Capital Partners. We invest in primarily something with a Japanese angle, and we currently manage about 1.5 billion US dollars of fund, and we are currently in our seventh fund. So we are one of the longest standing and largest VCs in Japan. So hopefully we can kind of give you a sense of how Japanese startup ecosystem has evolved and how vigorous it is right now.
Okay, then we have Hara-san.
Hi, hello. My name is Kenichiro Hara from Coreline Ventures. So Coreline Ventures is a US Japan-focused venture capital firm investing in seed to early stage venture startups. And we are spin out from DCM Ventures, which is also Silicon Valley based, a early stage venture capital firm. And the whole team of DCM Ventures and part of US team started new venture in January this year. And we usually started investing in seed, like first round of the new startups. And we are usually building a pretty much concentrated portfolio, so about like 20 to 25 startups from the one fund. So we were the first and the largest shareholder of Free, accounting SaaS company in Japan, and we were the largest shareholder of Sansan. And both of them are top 10 largest IPOs in Japan in the past decade. And we continued the same investment strategy and tried to find the next big outcome in Japan and also in the US.
Thank you. Then we have Hata-san.
Hi, good evening. My name is Yuka Hata. I'm heading the fund investment team for Japan Investment Corporations. Just to give a quick introduction, JIC itself. JIC is a government-backed fund created by METI, Ministry of Economy and Trade of Industry, for the purpose to strengthen our global competitiveness of the Japan's kind of industries. So we have actually two sides of the activities. One side is more buyout space. We have a subsidiary called JIC Capitals, where we deploy the capital to the large and buyout transaction. It's quite unique that as a government, we actually tap into the buyout space. Currently, they're managing the total amount is So the flagship fund is 200 billion Japanese yen, which is roughly like a 1.5 billion US dollar equivalent fund. Together with co-investment vehicle is roughly like 6-7 billion US dollar equivalent. So altogether, we have a big chunk of money to really work on the large end buyout transactions. Separately, we also have the growth stage investment arm called VGI, Venture Growth Investment, really for the purpose to really back up the growth stage of the Japan's kind of startup in this ecosystem. Currently, they're also managing the flagship fund, 200 billion Japanese yen, which is roughly 1.56 billion US dollar fund. So we have a big chunk of money to make sure to support the Japan's kind of ecosystem. And myself, from the fund investment team, we also back in our independent Japan's kind of VC fund from the seed manager up to the growth stage managers as of today.
Thank you. Now, with this panelist, I think actually we can get answers to almost any question regarding Japan's startup ecosystem. But since half of you are not from here, so maybe we'll just start from the basics here. And I think if I talk to a lot of investors and startup founders, Japan is a kind of strange market. They know this is a very large consumer market, usually third largest, sometimes fourth because Germany beat us last year, but somewhere in the top 3 or 4. It's a big market. And if you look at Tokyo Stock Exchange, it's actually one of the top global markets outside of US with deep liquidity. And startup scene, well, we have a lot of activities going on, but people often criticize, whether sometimes wrongly, but also very accurately, that Japan hasn't, for the size of its economy, produced as many unicorns, say even our smaller neighbor Korea, which has actually produced more. So there's something a bit different about Japan's ecosystem. So I would like to actually get maybe I'll start with Takamiya-san here because you know the ecosystem from the beginning. So can you explain, especially to our foreign friends here, what's Japan's startup ecosystem is like today and how did it get here?
In short, I think Japanese startup ecosystem is now surpassed the inflection point. So just to throw out some numbers, when I started in VC back in 2008, the total amount of investment in total of Japan per year was only about 300 million.
Okay, and
USD.
when was that?
2008.
Okay.
And a couple of years ago, we reached about $10 billion US dollars. And we had our very first unicorn go public in 2018, which was Mercari, a deal which I led. And that went public with about 7 billion US dollars. And since then, we had 74 companies that touched down to the $1 billion line during their private phase or within 1 year of going public. And one uniqueness probably Akio-san want to touch upon is that the fact that the Japanese startup can go public pretty small or pretty immature for good and for bad. And the reason why I think to compare oranges to oranges, I think the narrow definition of unicorns doesn't really fit to describe the Japanese ecosystem because in Tokyo Stock Exchange's growth market, which is a small cap market, you could go public as small as like 30 million. You could, but also you have
30 million in terms of valuation or the money raised?
Valuation. As small as 30 million USD. So it's a very open kind of IPO window in Japan, but you can also choose to stay private for longer. So some companies go public quite early and grow after going public. So that's why the equivalent to, let's say, US's unicorn. I think the $1 billion line within 1 year of public may be closer to oranges.
So how would you characterize Japan's IPO? Is it like US Series B or C?
Yeah, the smaller ones. But as I mentioned, the bigger ones like Mercari, they went public with 7 billion. So it's the Tokyo Exchange is very, very flexible and open.
Now, Hata-san, you often have to go out overseas and represent Japan. So for those occasions when you're outside of Japan, how do you explain our ecosystem?
Sure. Well, thanks for the questions. Actually, if I may just add the comment from the Takamiya-san, I think the great things in this ecosystem is our ecosystem is really backed by the government, including the JIC itself. And maybe thanks to that, kind of ecosystem kind of effort, gradually we have seen that many more good talent people are coming into this kind of ecosystem. That's very big change, if I may compare to the maybe the 10 years or even 10 years before that, the talent pool is definitely increasing in this ecosystem. And in addition to that, I think that before the startup, as maybe Takamiya-san mentioned, yes, maybe the IPO windows somehow very flexible that the small IPO can possible in our ecosystem. But however, more and more the serial entrepreneurs are increasing the ecosystem that actually are pushing more the people who are seeking more global expansion, or even not just only the global expansion, even within the Japan market. They are actually seeking to expand more business with a big scale. That's actually quite a good trend as of today for the ecosystem.
And probably another perspective in terms of inflection point is that Hata-san has vast experience in the LP side, and she was one of the contributors of kickstarting the Japanese VC and startup ecosystem. But very initially, there was hardly any institutional investors investing in Japanese VCs and startups. But right now, I think we are now seeing quite many institutional investors, definitely government affiliated, like JIC has kickstarted. Can you touch upon the LP side?
Well, thank you so much for the question as well. So actually, if I may just again, I think I started my Japan VC investment 2000, probably 18, 19. I think that's the time actually I was with Nissay Asset Management to invest into Globis Capital. But actually, even before, I had a chance to communicate with the Globis. At that time, as an institutional LP who deployed the money to the global market, I wasn't really enough persuaded by the Globis Capital to obviously invest to the. I mean, it's not just only for the Globis. It's more like Japan's VC opportunity-wise compared to the, obviously China or any other countries for the VC perspective. But these days, more and more the institutional VC firm are increasing. Maybe one reason, thanks to the JIC's effort, we actually, supported many, like immature VC firm, and we tap in and make sure we actually put our equity to their firm so that they are expanding their platform, attracting more the good talent people onto their VC platform. Obviously, this is very important because if you don't have enough AUM, you cannot attract the good talent people on your platform. That's really one step forward. And obviously, it's not only for the attracting the good talent people into the VC platform. They are actually learning a lot that how to interact with the institutional investors in and outside of the Japan. That's one side. Also, JIC is actually working hard to communicate with our investing managers how to set the governance, how to expand their team platform, and how to improve their operation. All that dimension actually pushing more institutionalized VC firm in this kind of ecosystem.
Okay, so I'm going to stop all the positive talk here for a second.
Well, but maybe Takamiya-san want make a comment quickly,
do you want to say something?
Oh, just quick comment then. In terms of the LP side, within the last 15 years, the amount of money flooding into the ecosystem has been 30x. And the uniqueness, like Akio-san mentions, is that the broadness of the LP is quite unique to Japan because a big chunk of the money is coming from Japanese big corporations, maybe 50 to 60%.
I think Japan is the capital of corporate VCs now.
Yeah. And the government money is coming in, and now the institutional money is coming in. So I think in terms of VC fundraising, Japan market is the most open market right now in the world.
So we heard about, kind of some of the positive developments here, but obviously it's not all roses here. We do have some structural challenges, and maybe this is where I will just tap into Hara-san because he has experience looking at both markets in U.S. and China. So, objectively speaking, without this, rainbow-colored glasses Hata-san and Takamiya-san wearing, what are the actual challenges we are facing in Japan right now?
So I think this market has like pretty interesting, good potential, which is like here, like Japan is, as you said, this is like big market, especially for B2B, right? If you look at Fortune 500 companies, like many of them are still like Japanese companies, still like top 3, right? However, given the size of like market, given the number of like B2B companies, we don't have that many entrepreneurs yet. Like right now, we have like every year we have like about 1,000 seed investments in this market. That is not large enough, in my opinion, and probably that is coming from.
What do you think is the right number for Japan's ecosystem?
Well, because I think the number of entrepreneurs doesn't directly translate to the market size, right? It should be translating into the number of like pain points or number of opportunities, and then so what happens right now in Japan is it is pretty high odds of success for entrepreneurs to go, even it is smaller, to go like IPO, to go exit. That number, that percentage is much higher compared to the US. That's a great thing for entrepreneurs. But the challenge right now is the outcome is still small. I think that is probably coming from the timing of IPO, or that is probably coming from the, ambition of the entrepreneurs. And the market is big enough. So I still believe we can generate a lot more like billion-dollar outcomes from this market.
So one opportunity, especially for those startup founders visiting here in Japan, you probably have higher chances of making it here than your home market. So I would invest in developing Japan market.
Yeah, so if we look at the numbers, for instance, the graduation rate from seed to Series A, which is like how many seed companies go successfully like raise Series A. And in the US, the number is about 25 to 30%. So basically, 75% of the seed companies cannot go beyond Series A. So they are not dying, but they cannot go beyond Series A. But in Japan, 60% of seed companies can go beyond Series A. That is massive. Like,
that's pretty high.
Yeah, that's pretty high. And then even like Series A to Series B, the number is about like 50%. So if you start the business here, probably you can like, with a high chance, you can go beyond like Series B and Series C. That is not happening in China. That is not happening in the US.
China's success rate is very
low. Very low. So that's the reason why Coline Ventures, or from DCM Ventures, we only do seed investments in Japan, not in China, not in the US. Because if you do start like companies in China, you will have like 100 competitors doing the same thing. And so this from seed to Series A, it's almost a random play for both entrepreneurs and both for like investors. But here in Japan, given the number 60%, you can like go beyond like Series A, and we can like have a seed companies go beyond like Series A, Series B with a pretty high chance. So that's the reason why we only do seed investment here in Japan.
Can I ask the question that what's the implication from that? Obviously, yes, we have a small number of the startup as of today, but seems like they are highly likely that go beyond to the Series A, mean that the quality of the startup is very dense in this market, or VC is not selecting properly for the good startup.
I think this is a demand of supply problem of capital, to be honest. So as Takamiya-san said, this market has, if you think about the number of entrepreneurs and the number of opportunities as an entrepreneur and the capital, I think we have a pretty good size of capital for entrepreneurs right now. So I think demand of supply problem.
Yeah, and that kind of shows in the end result where I don't have the right numbers off my head, but I think there was like 4 times more public companies in Japan than the US. GDP-wise, we are like 1/3 to 1/4. Yeah. But we have.
So actually, then it's a good segue to the topic we are discussing in the backstage. So there's something, kind of some kind of bombshell that was dropped by Tokyo Stock Exchange about listing requirement, and that created a lot of controversy here among the startup and VC industry. And can you share with us what that story was?
So within the last month or so, there was this guideline discussion about the Tokyo Stock Exchange, saying that there is like a new exit bar introduced for 10 billion Japanese yen, which is roughly like
70 million?
70 million USD. And so after
Actually,
5
not crazy high, but
Yeah.
if for Japan, it seems people are saying it's
it
actually a
used
bit
to
high.
be 4 billion in 10 years, but the bar was raised relative to the Japan standard. And actually, 70% of the Japanese stock exchange's gross market, which is a small cap market, hits the bar, and they have to kind of change to the kind of like slow growth kind of market, which is the standard.
So if they don't do anything, 70% of those companies will be wiped off the market.
Yeah. So the
pretty
meaning of that, I think, is it's always debatable, but we have too many small companies go public, and sometimes they become like a public living dead, and also
Zombie companies.
yeah, zombie companies, and going directly to the topic, priorities for the next decade. Probably the priorities, from my perspective, is that we need a big company that can become a core of the new industry. So basically, we want to create $10 billion companies. So in that context, having too many small company widespread doesn't help in coming up with a sizable new companies or new industries. So I think all of the reform, including the Tokyo Stock Exchange's bar, is kind of aligned towards the goal of coming up with a new decacorns.
So, but if you add up $110 million company, does it become a unicorn?
That's the point. So, by simply adding, it doesn't make there's less efficiency and so on and so. But in terms of focusing the resource meaning the management talent and the member talent and also the capital, I think you concentrate on the areas where it is scalable. I think we are able to come up with a really scalable companies, but with a significantly lower success rate. I think the success rate in Japan has been too high.
So you like to see more failures in Japan, but people take more risks for it.
I think in principle, I completely agree with the goal of coming up with really big companies. But I think stepwise, we had the luxury of being able to go public small, and basically we were like Ichiro, where we could have like many single hits with high average. But if you suddenly stop the IPO window, suddenly the exit would be clogged. So I think
Is that a good thing or a bad thing?
definitely a bad thing. So let's say after the Lehman shock, 2008, we only had like 7 companies go public per year. And I think, if we don't do something positive to kind of push the exit market, we might go into the same kind of situation. So currently what's debated is that we need other means of exit, like enhancing M&A and coming up with a secondary market. In Japan, the M&A market is still very immature, both in terms of size and number. And also, we hardly have any secondary market in Japan. So I think, that measures to enhance secondary and M&A has to be coupled with the IPO bar.
Thank you. Now, with that topic, maybe I'll also switch gear a little bit and talk about something else, kind of an elephant in the room, right? We keep talking about, okay, we need to make bigger companies. And I think at least one, a strong voice we hear among the industry players is that one of the reasons that we don't have many unicorns is that we have lots of companies going after smaller market opportunities. Now, don't get me wrong, I think Takamiya-san is right that there are big market opportunities within Japan, but it's very difficult to go after, say, same kind of market size, say, some of the top US or Chinese companies are going after if you're only looking at in Japan. So there is this I think, voice. I think in industry, I think GIC is one of them. We need to create more global startups from Japan. But Hara-san here had also, very realistic perspective on that. So maybe I'd like to hear, Hata-san and Hara-san's perspective. Maybe I'll start with the positive with Hata-san.
Okay. I'm actually more, excuse me, so I'm more like a big believer that we should actually focus on creating more the global startup out of this market. That's obviously, probably the offset that, maybe Takamiya-san's concern. Yes, maybe the small exit window is going to be shut down, but obviously the hindsight is we all focus on creating big startup out of these countries. But for that effort, JC's recently, past 2-3 years, we have started to invest in several global players such as NEA in the US, Atomico in Europe, and Vertex in Asia, Southeast Asia, for example, for the purpose we try to kind of create more diversified investor ecosystem in these countries. Before, the Japan's ecosystem was pretty domestic driven, local players. But if we try to aim more create a global startup, we definitely need to invite more international players into this market and work together with the local players and aim to expand to global market. Global market is not necessarily always to the US, depends on the business model. We should aim to the Europe. For example, the climate tech, why we should be bothered to go to the US, for example, we should think about like a Europe.
Yeah, they just killed that market.
Exactly. So that's, obviously we should create a corridor in between the countries to Japan. That's something that the JIC is going to make efforts to make it happen. Why? Because we believe that the priority for the next decade is creating the big global scale startup out of these countries.
And something I think all of us here, if you're from Japan, you're kind of feeling sad, right? Because in our previous generations, Japan actually built global companies where they make more revenue outside of Japan than in Japan. Whether it's Sony, Toyota, Honda, all those were earlier generation of Japan's tech companies. And unfortunately, we have a very little current generation of Japan's internet companies that make a lot of large revenues overseas. And maybe one exception is someone like Recruit that acquired Indeed. Indeed is indeed a global business generating probably more revenue outside of Japan than domestically, but it's very rare. But I think Hara-san also, has an interesting, somewhat realistic perspective. And you, I think, in the back room, what did you tell us?
So the question is like if Japanese startups need to go global to become like big outcome. And then I think, of course, it depends on the industry, but I think that question is a combination of like several questions. One, is Japan big enough as a market? And two, is it easy to go like global? And for the first question, I still believe this market as a, for the B2B software market, the companies are paying $1 billion every year for like third-party vendor or like software, right? They hire like system integrators, like create like in-house system. And the budget is massive compared to like US companies where usually the in-house engineers build everything from scratch for like free budget. So I think this is like full of opportunities for B2B markets. And is this big enough for like B2B, like consumer market, like consumer startups? I don't know, to be honest. We have like only 100 million like people in Japan, and we need to compete with the US products. If you open up your mobile phone, usually probably your app is basically like US products. Like you need to compete with Instagram, X, Twitter, Facebook, YouTube, whatever like US products. However, B2B, like our icon, like of a Sunshine Free, it's a little more like domestic play. So it is like high odds of even like higher odds of success for B2B companies only focus on this market. And then I believe like this market is pretty big. However, I think that is if you want to try to create $100 million revenue. If you go like beyond $100 million revenue, like to create $1 billion revenue, it is like probably not enough market, and maybe you need to go like outside Japan. But if you want to build like $100 million revenue, I think Japan is the best market compared to like US, compared to China, where the competitors are everywhere. That's my point.
Say something?
I agree on Hara-san's framework, but I still believe there's like a $10 billion market cap opportunities in Japan too. So, as Akio-san mentioned, Japan still is number 3 or number 4 GDP country in the world, and there is actually more than 10 markets that has $100 billion market size. So if just a quick sum, if you want to become like $10 billion market cap company, the market size probably have to be more than $100 billion. But still, in Japan, there's like 10 or more, something like 12. I think we've identified like 12 markets. And, to Akio-san's point earlier, the competition in Japan is so weak that, it's easy to dominate the Japanese market. Like Sansan or Free, they were able to do that. And one of our portfolio example was a company called Anpad. They do a SaaS for construction industry. Again, this is more than $100 billion market. And while we
Is there a competition? Not much.
there's hardly any. So while we invested in like the classic VC phase, Sequoia China came into a Japanese company for their very first time in the growth phase. And initially we thought their story was taking Anpad to the China market so that they can get the overseas expansion upside. But as we communicated, their story was Japan domination story, and they're pretty happy, and they're quite confident that if Anpad can dominate the Japanese market, they believe that they could become multi-billion-dollar company.
So I actually do agree that probably you can, with some stretch, create a $10 billion startup from Japan. But I don't think it's possible to create $100 billion company or $200 billion within just domestic market. And I think the common issues we're seeing here is actually lack of global talent. And this is something, because we also operate in Europe and US. One of the things I noticed, whether it's in Berlin or San Francisco, it's very rare to see pure German startup team or pure Anglo-Saxon white American startup team in San Francisco. They're usually Chinese or Indian founders. Even in Europe, we're investing in Chinese European founders. And so one of the advantage, and I think some of those markets they actually were able to attract very international mix of talents, which is starting to happen a little bit in Japan, but it's not to the same extent. Even within Asia, if you go to Singapore, I don't think I've ever met a founding team where all the team members are from Singapore. I think that's a very rare breed. Most of them have like Indian tech co-lead or, very international mix. And so I think that's something that I'm hoping that in 10 years will change. But do you see any strategy or signs of hope here?
Yeah, I completely agree to Akio-san's notion that there is no such thing as a domestic startup going for the global market. You probably have to be global from day one. And for example, I think the top Japanese entrepreneurs are now realizing that and really starting to swing for the fences. For example, one of our portfolio companies, Josys, was started up by the founder of Raxel, which once was like a startup, and then they went to $3 billion market cap. The founder quit his CEO role at Raxel and he restarted Josys. The team assembly on the day one was he had an Indian CTO who used to head Dell EMC's global technology division, and he had a CPO from the Bay Area who used to be the CPO of Blue Jeans, which was Valley startup acquired in the Valley. So, it's a global startup that happened to have a Japanese founder as a part of the team. So, and, I think what they have done is identify a kind of global, very common pain point or the use case. So what they do is a SaaS management SaaS. It's quite ironic that in average in the US, there's like 150 SaaS per company. and it's getting all messed up. And they are looking to manage the security. They're looking to manage the cost of the SaaS, and it's a very common pain point across the world. So it's a global problem that is able to be approachable by the global team. So to Hara-san's framework of attractiveness versus the difficulty, attractiveness is huge, but difficulty is huge also. So it's a high risk, high return kind of investment from the VC perspective. So I think, from the VC perspective, we need to come up with a portfolio where we go for high risk, high return, also like middle return, low risk kind of thing. So in terms of portfolio construction wise, having the home market in Japan, we are able to construct a portfolio where the middle return, low risk kind of opportunities are easy.
And we actually do have government policy support for these kind of talents now. I don't know, especially if you're a visitor from outside of Japan. Japan now, I think, has easiest and loosest immigration policy for entrepreneurs. You're not going to get into the U.S. They're shutting down H-1 visa, but Japan is open. And we are actually starting to see influx of foreign founders, not just from places like other Asian markets, but I've even noticed Chinese entrepreneurs arriving in Japan, and also some of the Silicon Valley founders. And some of them don't necessarily come here initially for the entrepreneur reason. Maybe their spouse was Japanese as they came, or they were assigned by Google or Facebook to work in Tokyo office, then decided, hey, they like the lifestyle in Tokyo, so they decided to stay in, which doesn't really matter. But I think there's an opportunity, and as you know, we have this revival inbound tourism in Japan. I think some of those people come here on a holiday and decided to stay. So speaking of that, if you're also outside of Japan, it's perfectly fine if you don't leave Sushi Tech and just stay here and continue your business. We're open for business. Now, with that, having said that, I think we still have, other challenges in the ecosystem. So we have discussed the capital, talent, exit opportunities, and I think Hata-san has something very important about critical, elements that's missing in the VC industry. Basically, she was saying that we are not mature enough compared to global standard, and unfortunately, it's probably true. But I wanted actually her to elaborate on that comment. So, what's missing among us here that you'd like us to improve?
I think there's definitely people really they improved over time, and they're quite smart people, so they're really learning quickly. Just happened to be before they just haven't had a chance to communicate with institutional investors, return expectations, right, and the governance, and also the disclosures, all that stuff. Just Japan VC peoples just didn't have a chance to communicate. That's all. But once they actually started to communicate, understand what the requirement to receive the smart capital outside of Japan, they can quickly pick up. And I think all that, the platform and the governance, again, the disclosures all kind of improves kind of over time. That I totally believe. And maybe another aspect, if I may add, probably, again, it's maybe similar to the startup level. Maybe the strong ambitions or in a way, the more aggressiveness to scale that platform, one, and try to challenge to the global market to raise the money. That probably the ambitions is definitely needed for the
You mean
Japan's
both for the startups
both for
and
the
VCs?
startup and the VC perspective. One example, like my experience to work in China and India, all the emerging manager, the growth capital investors, they are actually immature fund one, fund two, but quickly they learn and how to really raise the money from the overseas. Obviously, China has a strong opportunity that really backed up a lot. But not just only that. For example, they are aggressively hiring Singaporean people in investor relations and make sure that they can interact properly to the global market. Yes, bilingual people, you can hire the Japanese, but sometimes, Japanese mindset or the experience to communicate the global, somehow it's not the same mature levels with the, obviously the Singapore or other market. So you can actually try to a little bit think about more in ambitious way that how you can actually expand your platform, how you can be sophisticated in the platform to create, to attract the overseas money.
Okay, thank you. So we have to become more aggressive. Did you get that message? But by the way, we have about 4 or 5 minutes left, and I was told it's not encouraged, but okay to take questions from the audience. So maybe we'll take the chance and open up the floor for some questions. So do you have any questions to any of the panelists here? And if there's no mic, I'll go to you. Oh, please, can you introduce yourself quickly and then ask the question?
My name's Olivier. I'm from the startup side working. I came over a year ago to help a startup here on the global expansion.
Excellent.
So I'm like approaching this ecosystem more from the startup side, right? So one of the barriers you're discussing is funding, access to risk capital, which as you said is increasing. CVC, institutional investors through the roof. But the other barrier, especially coming from Europe, that's one that I know well, is how willing are those same institutions, those big companies, not only to invest, but also become the client of that startup? How open are they to actually collaborating on building those domestic startups to the size they need to be to actually, get that critical mass? So I was wondering on your perspective.
Who wants to take on this question?
Sorry, I couldn't catch the question quite properly. So, yeah. The microphone is a little.
Use my microphone.
Might also be the speaker, it's blasting in my face. So, so the question was risk capital, institutional investors up 100%, agree, one of the main barriers. But how willing are those same institutions, those same large companies that are investing to actually take a risk and become a client of those startups to help build those companies to the level they need to be?
I think he's mostly referring to, say, large corporate VCs. So they're willing to invest in startups, but how much are they also willing to take on startups as clients and use their services?
I think that is one of the biggest changes over the past decade. Like 2015, 2016, nobody wants to buy cloud software. Right now, everybody has a certain budget, which is massive. And then the funny thing is many Japanese enterprises are open to companies from outside Japan, also inside Japan, and then that is I think that creates a huge opportunity for many startups in Japan. I think that is again the biggest good changes in this market.
And probably the biggest reason why the corporate invest into startups is because they're looking for new sources of open innovation. So they're willing to collaborate. That's definitely a point. And another thing, even on the government side, the Japanese government has introduced this 5-year startup enhancement plan, which is one of the main pillars of the Japanese government's policy. Within that, they have introduced the SBIR, the government procurement program, where they would actually procure from the startups if the quality are the same. So even the government as a client is really eager to buy the startup products. So that's
by the way, even Japan's defense force now has a small budget to procure from startups. One more question. Yeah. Oh, so you guys asked the same question? Okay. Anyone else? If not, I think the time is almost up, so I'm going to probably wrap it up here. So everyone, thank you for attending our session, but please end this with a big round of applause for our amazing panelists here. Thank you.
Thank you very much. Please give a round of applause to all the speakers.